if you're, as in,
Yep.
you know, when trading a currency pair, if one is going up or one is coming down, what is causing it? Is it because one has just gained, the value of one has gone up, or the value of the other has gone down? So this is where one needs to basically check the indexes before making a decision as well. Yeah. So for me, that was, you know, one of the things I took home there. Yeah.
Excellent, excellent. Yeah, those individual indexes shows the you know, the strength or the weaknesses of individual currencies. And remember, currencies are the only assets that you could trade where the assets are actually paired together. All right. And because they are paired together, it actually gives you an advantage. And the advantage is if you could figure out which one is strong and which one is weak, and that is called economic divergence. When you figure out when that economic divergence is happening, then you could play one against the other to be able to have a trading idea. And, you know, the strengths or the weaknesses are affected because of the fundamental factors anyways. So those indexes are very, very super important. And you would have seen me using them quite a lot, you know, during our analysis. So yeah, I'm super happy that, you know, those light bulbs are coming on. And especially with the fundamentals as well, one of the things for me that stood out, as you mentioned, fundamentals, is when he said, literally, we use fundamentals, or we analyze fundamentally any asset that we're going to purchase. So say, for example, the house that he mentioned. If we are going to buy a house in a certain area, we are going to figure out, okay, what is the population density there? Are there any supermarkets around? Are there any train stations around? Are there any, what's the crime in the area? All of these, you know, all of these things we research before we decide whether we want to purchase or we want to pass on purchasing that property in that area.
Our anniversary, I'm going to give you something you've been wanting.
Right? But for some reason, we don't carry that through in our trading in general. And there is no reason to do so other than misinformation that people have been giving us with regard to how to approach trading. So this is why, you know, this is why I've started this command contour and this mood swing movement, so that we could really get away from all these lines on the chart and figure out what is really happening fundamentally in the market before we make a trading decision. And you know, hats off to all those who have been putting all the articles and fundamental information into the mood swing group. Hats off to you. Anybody else? What was a big takeaway for you? Feel free to unmute yourself.
I think one of the things that that I learned is that we don't need to trade every day. From what Cleveland was saying, the example he gave of the Facebook incident, where they just traded once, and similarly, when the British pound tanked, there's a particular hedge fund that made tens of millions just on that one trade. Well, traded it down to the bottom, and then they probably got in at the bottom.
Got in where we got in at the bottom to buy it back, right?
And buy it back. So that's what I learned. It's like stalking the markets in a way. and just looking out for those black swan events and looking out for something that's going to move the markets rather than, you know, looking to be a day trader. I think we're moving more towards investing than trading. I think that's the message I got.
Well, I mean, investing is long term. You know, you're looking at 5-10 year plan. So not necessarily investing per se, but more of a swing trading mentality than just a day trading, jump in and get up. Because the reality is that fundamentally something is not necessarily going to happen fundamentally every day that will move the market in one direction or the next.
Yeah.
So we're looking for that event that is going to push or create a wave in the market that we could jump on and ride. And then when you ride the wave, you just wait until we get some other event that will create another wave. But not every day a wave is created, that, you know, but as day traders, as somebody who is day trading, because I don't day trade, right? But somebody who's day trading or, you know, trying to scalp the market, they're always trying to force something or try to squeeze something out of the market when it's not there. And that is how people get into trouble. And that is where the dependency on all these mathematical indicators come from. But it's not necessary. Betty, can please give us a short tutorial on how to use the indexes effectively? Yeah, we could go through that tonight. No problem. We'll do that. Anybody else? If you were on the call, anybody else? Or what was one of the takeaways that you had from that call on Friday with Cleveland? And stay tuned for the end as well, because I have an announcement to make.
Well, while someone else is waiting to speak, Ballet, the
Sure.
other thing I think I got is that institutional traders, they don't think very much of us retail traders. And,
absolutely not.
And we have a bad reputation amongst them, quite rightly so, I think, which is not fair. I've always thought this from the beginning, that we can't possibly know what they know. We'll always be at a disadvantage, and they can have 99% of the market as long as we can, you know, focus in on what we can know, because we can't possibly. It's only really since joining your team and having the command contour and the mood swing group and understanding and finding where to get information on the fundamentals that we're now just starting to understand how to get that information. But even then, they have whole armies of researchers, analysts.
Exactly. So you see, do you see the reason why I am asking everybody to make a contribution into the mood swing group? It is because those companies have armies of people doing research. And the traders have those people behind them supporting them. But you as a retail trader at home, it's you on your own. And you've got to be the researcher, you've got to be the risk manager, you've got to be the mindset person, you've got to be everything to yourself. It's all, so you literally fight. It's like a serious fight. I mean, how are you going to compete with those people with all those resources? So that's why we have the mood swing group, where everybody contributes and puts in those fundamental articles and research, so that it lightens the load. Anybody else? Anybody else at all? What was your biggest takeaway from the call on Friday. With Cleveland.
Honestly, it was a little bit depressing at times, because I think there's some of us who've been on this journey, let's call it a journey, because we haven't, somebody was saying you have to put in 10,000 hours to become an expert at anything. And some of us that have been doing this for the last couple of years, and we've been on a journey, sometimes up, sometimes down. In a way, it was reassuring to hear him explain what's really going on. And on the other hand, it was actually a little bit depressing to think that, you know, we were sold into something, we weren't really prepared. Let's just say that we weren't as prepared as we could have been at the start of the journey. But now I think that we're on the right path.
Exactly. Now, as he mentioned, right? If you're aspiring for if you're aspiring for something, and somebody that you look up to as a person being a success will tell you, hey, jump onto this because this is so amazing and blah blah blah, whatever. You know, a lot of people jump onto it without question, because this is a person that you're aspiring to, or you're looking up to be, and you're aspiring. But one of the things that we as a business always have to do is question, well, actually, is this actually truly solving a problem? Is we have to apply logic and not only aspiration. Because if we apply aspiration only, then sometimes we just kind of do anything to achieve and to aspire. But we want to aspire, aspiration, nothing's wrong with aspiration, but we want to aspire with the truth. And again, that is the reason for Command Contour and for Mood Swing, so that we're not hyped up by anything because somebody is just saying, oh yeah, we're making loads of money here. Whatever, you know how the marketing goes. Right? Oh, okay, so a few people coming in. So it's all well and good to be aspirational, but we also have to have some sort of logic and truth behind the aspirations. Welcome, welcome, welcome. And so funny you said, yeah, the institutional guys really do laugh at retail traders and how retail traders approach the market. Now, I mean, when I first started the journey, and my pal was saying, because I was looking into trading a long time before I even started. And then, one of the major issues in actually getting the right information in trading is that it's actually very expensive, right? So when I was looking into trading, we were talking like something like 5,000 pounds to do the course, right? With professional guys. So no retail person is 2 seconds. Yeah. Sorry. One of all guys here was just calling me and I don't know why. Yeah, so a retail person doesn't have that kind of money to really get started in trading. And if one of your friends tell you, hey, you could get started in trading for 200 US, which is what happened in my case, right? You can get started in 200 US. Then you're like, all right, yeah, I'm gonna jump on that. But soon when I jumped onto it, I realized, hold on a minute, something ain't right here. And I actually went and researched in my local area somebody who traded professionally. And I actually did one-on-one sessions with him. So when I showed him like certain tools, like, you know, certain scanners, he was like, what is that? So I was like, haven't you ever heard of, you know, the scanner, this harmonic scanner, man? You never heard about that before? He was like, dude, that will never help your trading. I was like, what are you talking about? I mean, look at my pals who told me about this trading thing. They are on the harmonic scanner and doing that. What are you talking about? And he says, that will not help your trading. And he says, I'm really worried for you. And of course, I didn't listen to him. He was a professional, and I'm the retail guy now, started off. But I was like, nah, I ain't gonna listen to him. You don't know what you're talking about. This harmonic thing is the best thing ever. And so I just continued, and I ignored him for a little while, and continued getting licks with this harmonic thing, right? This tool that, you know, the guys that told me about this was succeeding with. But the reality is that the guys that told me about this, they weren't succeeding with it. They were just wanting people to sign up because that's their residual income, right? But they weren't succeeding with it. So eventually when I realized, hold on a minute, yeah, this is absolute nonsense, then I went back to the training that I got from my institutional guy and just stuck to that for a little bit, and then delved a bit more into you know, connecting with Cleveland and, you know, getting some mentorship in that regard as well. But yeah, so I realized from a while back that, you know, a lot of this was just total hype and selling a dream that was not true. So, you know, this again, this is why we're here to expose the truth to retail traders, so that, you know, they understand what is truly driving the market. And, you know, when an edge appears, fundamentally, that we should, you know, how we could take advantage of that, you know, how we could take advantage of that. Any others, you know, takeaways before we check out the indexes? Any other takeaways at all?
Yeah.
You don't know what you don't know.
Exactly. You don't know what you don't know. Exactly. Go ahead, Malik.
I thought it was interesting when you talked about those prop firms.
Oh, yes.
That was huge, because prior to that meeting, on that incredible call that you hosted, I was thinking, okay, I'm gonna go ahead and sign up for this funded account. And just when I was about to execute, something, my gut said, don't do it. Just wait. And I thought about it, and then I would try to look for more information. I would look for phone numbers. I try to call and ask questions, but of course, none of those prop firms have any phone numbers listed. And you can talk to the chat, but what is that going to do? And so I just sat back and waited. And then you created that hosted call, and he was saying exactly how I was feeling. And so I was like, man, I'm so glad I did that, or I didn't do that. So yeah, that was one of my takeaways.
Right. Yeah, that's a good one, actually, Malik. So the firms that are professing to be prop firms and giving people funding are actually what we call trading evaluation firms, okay, where you actually pay to be evaluated as a trader, okay, to see if you could trade. And then what happens is, because the failure rate will be so high, right, they generate enough cash from the failures to be able to pay the people who are actually winning in their trades. And that's how it works. So for the most part, you're not actually even trading a real account. When you do pass the assessment, you're not trading a real account, right? If you can't choose your own broker, if the broker is the person who is just or the company that is doing the assessment, well, they're probably not even connected to a live fee. You're probably trading a demo account, even though you got funded, quote unquote. You're probably trading a demo account, and then whatever money that you make, it will be from people who have failed the assessments, or people who keep doing assessments over and over and over and over again. So that's how that works. But Cleveland did mention one prop firm that he would recommend, and also I've partnered with Cleveland, and we're going to be coming out with a proper prop firm setup in January, so stay tuned for that. We're going to be coming out with something proper so that you guys could get connected to the real real prop firm, not think so you don't have to pay for assessments over and over and over again. If you pass or if you fail, you just redo until you pass, right? And that's it. So that's just another way that they keep duping retail traders into thinking that they're getting something extra special when they're actually not. So yeah, that's a good point. Good point, Malik.
Thank you.
No problems. All right, let's jump on to the charts for a minute, and let's speak about the different the indices or the indexes of the currencies, and how we could use those in our trading, as take advantage of those in our trading. Yeah, yes. So it is a prop firm Ponzi scheme. Yeah.
Mash, you can go change your clothes.
It is a prop firm Ponzi scheme. But
no, just come back.
Remember we do.
Yes, just go in there.
There we go. Just remember that there is one that is that was recommended that is actually legit, right? So, and the beautiful thing about that one is that there is no time limit on hitting your target. So again, you're not forced into taking a trade when there is no opportunity. And that's the other thing that these Ponzi prop firms are doing. They give you such a tight time limit that you're forced into taking a trade. You're forced into trading for 10 days or whatever. You've got to take a trade for 10 days. Like, if they're forcing you to take a trade when there's no trade, then something is up there, right? So there we go. Okay, so the prop firm that was recommended was called Ment Funding. Ment Funding. All right, so Ment Funding was actually the one that created the base for. I'm going to drop the link in the chat here. Okay.
Can I just say, Coach?
Yeah.
Can I just say, Coach? We've been looking at prop firms for a while.
Yes, correct. Yeah.
And out of everybody,
yeah,
FTMO is my Forex funds top trader, all of these. Ment Funding, what I noticed, they only have 3 rules.
Yeah.
And there's no time limit. You don't have to worry about, you could pass it and get funded today, or you could just take your time.
Yep.
And I think for anybody, that is it, because there were some days last week, for example, Thursday Thanksgiving wasn't a day to trade.
Yeah, exactly.
But if what I find what they start doing now is that they're starting putting conditions on people that's not reaching their target. So if you don't hit it within a certain time, you're done. Even if you were in profit, right? So, but with men funding, you could trade how you could trade. Another thing Cleveland mentioned is that even when you get your real account, it's easy to lose it because of all the rules in terms of trading during news, right? I had a situation where I was in profit. I did my manual, but because the move closed, the move closed me out in profit at that time. I was in violation. Whereas with men funding, they allow you to trade during the news for those who understand it. They give you a lot more flexibility, and they call them soft violations. So you don't lose your account. All it is, they just close you out and you just get back in and just continue as normal. So I just wanted to point that out, that Cleveland didn't just say something because I think it was trying to promote. In studying a lot of prop firms, and trust me, I've gone through quite a bit of it, in studying how they operate. Men funding is for what we do, for how we trade, I think it's the best one so far. So I just wanted to add that little piece there.
Excellent. Yeah, that's it. Yeah, we'll have to go through the rules. I don't know exactly what the rules are in terms of how much drawdown and all that, but I'll be checking them out myself. But that was the one that was recommended. So let's go to the indexes. 2 seconds. Okay, so let's go to the indexes and let's see what this is all about and how we could use those. Now, before we even look at, all right, all the time we always have to think, before we even look at the chart, we need to conceptualize what it is that we're trying to achieve to be able to get a trading outcome, a positive trading outcome. Now, as I mentioned before, right? I'll just take this chart off for a minute. As I mentioned before, Forex is the only asset class that pairs two separate assets together, right? So the reality is that we could trade the pound on its own in the futures market. We could trade the GBP on its own in the futures market. We could trade the US on its own, okay? In fact, that's what happens on a daily basis. The big boys are buying and selling these currencies, individual currencies, right? They don't buy GBP USD. The big boys buy a lot of pounds, or they buy a lot of Japanese yen, or they buy a lot of euros, or they buy a lot of, which they are reserve currencies. Reserve currencies mean they are present in every central bank in the world, okay? Every central bank has these currencies. That's why they call them reserve currencies, okay? Now, to be able to get a trading opportunity, the best trading opportunities are when one currency is being bought a lot, and when one currency is being sold a lot, and we could pair those two together to get a trading opportunity. Now, whether we buy or sell depends on whether that currency is the base currency or the quote currency, all right? So let's talk about that for a minute, because we need to understand here base and quote currencies. So right here, for example, GBP USD, this is how it's spelt. The GBP is the base currency and the USD is the quote currency, right? So understanding how the spelling, right, of the currency pair is very important to be able to establish a buying or selling situation when we're using the indexes, okay? Now, for all the Japanese yen pairs, the Japanese yen is always the quote currency, okay? So it's always USD JPY, it's always Euro JPY, it's always CHF JPY, it's always NZD JPY, is always, and so forth, okay? But sometimes, in terms of the US, there is occasions, or there are occasions where the US is in front, like USD CAD, for example, okay? USD CAD, the US becomes the base currency, and CAD becomes the quote currency. So we always have to keep that in mind whenever we're looking at the indexes and understanding which is stronger, which is weaker. So when one currency is strong, when one currency is weak, then what we have there is currency divergence. And currency divergence creates great trading opportunities. So let's pull up the indexes for a minute. And let me pull up the NZD index right here. Okay, so this is the NZD index, and at the moment it is in the chat. At the moment it is what, right? And it's always better to go on a daily chat as well. So at the moment it is doing what? Up, down, going up, going down, strong,
up.
weak. Right. Okay, yeah, it's going up. Okay, it's going up. So we keep that in mind. Now there is a fundamental reason why this is going up. And literally you could go to this date right here and go to Google and type in that 11th of October NZD currency, and you should be able to find an article that gives some idea as to why this NZD has started to rise like that. Okay. Okay, so just keep this in mind that the NZD is going up. Let's go to the US. Right. So what has been happening with the US based on the index? It's been going down. So what do we have there?
Divergence.
Yes, exactly. So this is the type of divergence that we should be looking for, not divergence on your RSI or your stochastic. This is the type of divergence that we're looking for an opportunity. Now, okay, so if we have NZD going up, we had the US going down. If we pair the NZD USD together, what should happen in that currency pair?
The NZD is stronger and go up.
So the currency pair NZD USD should be buying or selling?
Buying.
Exactly, right? It should be buying. So if we go to the NZD USD here, we should see that was buying, right? That was buying. So clearly we didn't look at the our indexes there, but there we go, right? It was buying, right? Based off of the NZD getting stronger and the USD getting weaker. So now we know, say for example, now we know that the the USD was getting weaker. If we have any other of these indexes that are getting stronger, like for example, the pound, if I go to the pound, right, that pound was getting stronger. So I know that the GBP USD will be buying, right? Let's see the euro. What was happening with the euro? Well, okay. Overall, it was buying. And notice I'm on the daily chart, right? Notice we're on the daily chart. So overall, it was buying. So that Euro USD was pushing up. Now, it may have been a bit choppy for the past few days, but we could check that. We could check that. Euro USD. Right? Yeah. So overall, Euro USD was buying, and well, we could see that it is still pushing up, just because again that US has been pretty weak.
Yeah, and it looks like it's consolidating too on that one daily chart.
Well, if we go back to the Euro index, we could see that the Euro was consolidating here. It wasn't doing much. So, you know, nothing much to be done. Let's see what the CHF is doing here.
And you know what, Coach? All of this that we're doing, we didn't even talk about the currency heat wave at all.
Correct. I mean, but the currency heat wave will help you in your scalping positions.
Gotcha.
Yeah. Your currency heat waves will help you in a scalping position. How would you then use this trade for the NZD to find your entries? Now, to find your entries, this is where the command contour comes in to play. Your command contour is where you use what you use to find your entries, right? Because I've studied so much technical analysis, you remember technical analysis is the study of price. So what I've created with the command contour is I've studied pricing so much that I realized that these pricings that I've shown on the command contour here are the best prices for your entries. So if I go to NZD USD here, and we go back down to, say, for example, a 4-hour time frame, then you would see the entries for your NZD USD, right? On the command contour. So here, command contour for the buy, boom, right there. That's your entries. Now it really pushed up like crazy. It hardly had any drawdown, but look here again, you know, command contour levels right here. That's your entry again for the buy. Look, we have another entry for the buy here on your command contour levels right here. So, you know, that is how you get your entries. Command contour all day long for your entries, right? How do we get the indexes on TradingView? Thanks. Yeah. So Cleveland was good enough to share those indexes with you guys. I didn't want to share it out because that was his thing. So I didn't necessarily want to share it out per se, but he's given us and graciously given me the go ahead to share it out with you guys. So I'll share it, and he's actually done a video of how to install it as well, and that is in the mood swing chat. For all those that are part of the command control community, is in the mood swing chat, so you could jump on there and get that.
Yeah, one of our classmates did the same thing. Unfortunately, I wasn't able to get it to work, so I don't know.
You didn't get it to work? Okay, so I will see what I could do and get it. But it worked for me the first time. I didn't have any problems at all. So I'll just.
I think it was human error for copying and pasting, perhaps on my end.
Okay.
Yeah, that's probably what it is.
You gotta copy and paste individually, you know, one by one. Yeah. But I'll double check how to do it. Okay.
If I may interject code for a sec, I ran into that problem the first time I was copying them. Yeah. So Malik, the link that we got, you have to start from the right and
grab
where
left. The FX where it says grab. It starts with FX and then the colon and all that. Grab it.
Yeah. So
from the right.
Don't start from that end. That's the left. So go all the way to the right, and don't copy the letters that are bold.
The bold letters like the New Zealand dollar. Don't grab that part.
The NZD, no, don't copy that.
So we start from behind the colon that's in front of the NZD.
Yeah, you could include the colon as well. Just those 3 letters at the end of that link that it gave, don't copy those. Copy everything else and then paste them in your trading view and you should see it come on.
Okay, cool.
Because I ran into the same problem, but I got them installed. So just sharing that with you.
Thanks, Coach H.
Hey, no
Sweet.
problem, man.
Great. Right. So yeah, have no fear. It is there, and it is there in the Mood Swing chat in terms of a video. I'm sure Cleveland did a video, but I will also do some investigations as well. So yeah, so the bold is actually the title of the index. So there we go. Excellent. So does that clarify how you could use the indexes to come up with an opportunity? But again, just remember that the reason why these currencies are falling off like that is something fundamental that happened. Now, look at this CAD US, this CAD, for example, this CAD has been falling, the US has been falling. So what do you think would happen with the USD CAD currency pair? What do you think would happen with the USD
consolidation?
CAD currency?
Consolidation.
Yeah, exactly, right? So USD CAD. So we would know, right? It doesn't make sense.
That trade.
It doesn't make sense to even look at that.
Yeah.
All right. So it really hadn't necessarily been going anywhere, right? It hasn't really been going anywhere. So
wait, one last question about that. USD CAD or anything related to CAD. Someone said, one of our classmates, I think, was mentioning that it has something to do with the gold prices along with the oil prices. How so?
US, in terms of US, US is more or less, I wouldn't say it's not pegged to gold, because that pegging was lifted way back in Nixon days, right? So it's not necessarily pegged to gold. However, whenever the US is gaining strength, usually gold is falling. Is because investors are feeling more confident to invest in the US than gold, right? So they're buying up US, and money is moving from one place to the next, right? So it's moving out of something and going into something. So it's moving out of gold into US. So US is rising, gold is falling. And then Canada is a commodity currency, and the commodity that is pegged to is oil, just because it exports a lot of oil. So yeah, that's right. So whenever certain things are happening in the oil pricing, expect that to reflect in the Canadian as well. Similar to the AUD, the AUD is a commodity currency, and the commodity is actually gold, because in Australia, they mine quite a lot of gold and export a lot of gold. So there you go. In terms of a commodity currency as well, New Zealand is more like poultry and dairy products. And I know we don't necessarily follow poultry and dairy stuff, but there are poultry and dairy futures that could be traded. So if you're following that, then those things affect New Zealand currency prices as well. So say, for example, if there would have been some sort of disease that was affecting sheep, then the New Zealand currency will be affected. Yeah. So those are the drivers of the market. So what I would want to start doing is I'm going to start showing some of the main drivers in the markets, in the different currency markets, and we're going to start discussing that in some detail, so that your awareness, or your conscious awareness of what these fundamental drivers that we should be looking for is heightened even further. Okay. But yeah, we're gonna wrap it up there for now. We do have a session tomorrow in the New York session, right? We'll have a session tomorrow in the New York session. We'll look at the fundamentals, see what's happening. Feel by all means, drop any sort of fundamental stuff you've got in mood swing, and we could dice it up and see what's cracking on here. In terms of, we were looking at oil, for example. We have a fundamental bias on oil, which is to continue selling, and we discussed why we wanted to sell that, right? Because of the production that had increased. Okay, so we want to continue selling off here. You see how again, you see how beautiful price came up to command contour here on Friday and just dropped off, and our bias was always selling last week, right? We were always saying we want to sell. So even though we get a little pullback, right, command contour say, all right, thank you very much, sir, nice price, bam, we're selling. So oil bias is still for sell. Again, we wait for a pullback. We'll have a command contour level exactly around where that green level is there anyways. So that'll be our zone, and we just continue selling that thing. Okay, we just continue selling that thing. So as always, a pleasure, and we will see you tomorrow in the New York session command contour. If you're not a part of the command contour family and you want to be a part of the action, drop me a line, drop me a message. And also the recording of that call that happened on Friday, we are going to send it out to all the people who registered. So it's going to be sent to your email. Email will be sent out with the link how to access the recording.
Wait, you almost forgot the announcement. I think you're talking about the announcement for part 2 with Mr. Cleveland.
Yes, sir. That's it. That's the one. That's the one. Yeah. So there is going to be a part 2 to Mr. Cleveland, and we're gonna have it on the 9th of December, same time that we had it last Friday, and the flyer is already made. So that's gonna go out tomorrow. We're gonna have part 2, and I'm telling people, I don't understand why some people registered 5 minutes before the call to get in on the call. Please register ASAP to secure your spot, because the spaces are limited. I think I'll be maxed out at 200. So for the last call, we actually had 185 people registered. And a lot of them just didn't get on the call for some reason. I don't know. So please, whatever you do, register early, and we'll send the link out to you so that you could get in on this call. 9th of December, same time, 9:30 a.m. Eastern Standard Time, 10:30 a.m. Eastern Caribbean Time, and that will be 2:30 p.m. UK time. So, as always, fantastic to have you on, and we will see you very, very soon. Bye-bye for now.
Thank you, Coach BG. Thank you, Coach H. Thank you, classmates.